Imagine this, you wake up one morning, check your portfolio, and boom, your investments have doubled overnight. You feel unstoppable, like you've cracked the code to wealth, but then reality kicks in. For most people, the stock market is a minefield, one wrong step, and you're losing thousands in the blink of an eye. The question is, how do the pros pick winning stocks while everyone else is left guessing? Well, stick around, because today, we're unveiling the secrets of stock picking that Wall Street doesn't want you to know. And trust me, you don't want to miss a single second of this. By the way, if your current stock picking strategy involves choosing companies based on vibes, we have a problem. Act 1. The problem. Let's be real, most people pick stocks like they pick their favorite fast food restaurant. They hear about a stock on social media, throw some money at it, and hope for the best. But here's the hard truth. Hope is not a strategy, and the market doesn't care about your feelings. Ever heard the statistic that 90% of retail investors lose money? Yeah. That's because they fall for hype, ignore fundamentals, and treat the stock market like a casino. And if you don't want to be part of that 90%, you need a strategy. A system, and that's exactly what I'm about to give you. Act 2. The solution. 15 pro secrets to picking winning stocks. 1. Start with megatrends. Here's a secret. Pros don't just look for good stocks. They look for industries that are about to explode. AI, green energy, biotech, fintech. Find the wave before it starts, and ride it all the way to the top. And speaking of waves, you won't believe what Warren Buffett looks for before he buys a stock. 2. Follow the smart money. Buffett, Dalio, and big institutional investors don't guess, they make calculated moves. And guess what? They have to report their trades. Check out 13F filings to see what the big players are buying. Of course, don't blindly follow them. If Buffett buys Dairy Queen, it doesn't mean you should load up on ice cream stocks. 3. Look for moats. A company without a competitive advantage is like a sandcastle, it crumbles with the first wave. Look for businesses with strong brands, patents, network effects, or cost advantages. 4. Check the financials, but the right way. Forget stock tips, numbers don't lie. Look at revenue growth, profit margins, debt levels, and return on equity. If a company isn't making money, it's a red flag. But here's the sneaky trick that can make a bad company look profitable. 5. Beware of accounting gimmicks. Companies love playing games with earnings. Always check free cash flow, it shows how much real money a business is actually making. 6. Management matters. A great CEO can turn a struggling company into a giant. A bad CEO? Well, let's just say. Remember what happened to WeWork? Would you invest in a company run by a guy who can't manage his own lunch order? Exactly. 7. Insider buying equals green flag. If executives are buying their own stock, it means they believe the price will rise. If they're selling like crazy, that's a warning sign. 8. Watch the charts, but don't get lost in them. Technical analysis is great, but don't overcomplicate it. Look at trends, support, resistance, and volume. And remember, a good company at a bad price is still a bad investment. 9. Debt can make or break a business. High debt in a downturn is a disaster. Look at the debt-to-equity ratio, too high, and the company could be a ticking time bomb. And speaking of debt, the next point could save you from investing in the next Enron. 10. Check for hidden risks. Lawsuits, regulatory changes, competition, these can sink a stock overnight. Always dig deep before you buy. 11. Dividends equals stability. Companies that pay dividends consistently are often stable and profitable. But beware of dividend traps, sometimes, high yields are a sign of trouble. 12. Avoid the hype train. If everyone is talking about a stock, it's probably overpriced. Buy when there's fear, not when there's FOMO. 13. Test the business yourself. If you don't understand how a company makes money, you shouldn't invest in it. Simple as that. 14. Think long-term. The best investors don't chase short-term gains. They pick solid businesses and let time do the heavy lifting. And that brings us to the most powerful force in investing, the one thing that can make you a millionaire with almost zero effort. 15. The power of compounding. Compounding turns small investments into massive wealth. It's how the rich stay rich. And if you're not taking advantage of it, you're missing out, big time. Act 3, the call to action. At the end of the day, picking stocks isn't about luck, it's about strategy. The pros follow a system, and now? So do you. But here's the thing, picking great stocks is just one piece of the puzzle. If you want to turn small investments into life-changing wealth, you need to master the power of compounding. And lucky for you, I've got a video that breaks it all down, step by step. Click here to watch it now, and start making your money work for you. Your future self is counting on you. Make the right moves today, and you'll thank yourself tomorrow. See you in the next one. Thanks for watching. Subscribe, like, share, and press the bell icon.